Hey guys, what's up? Alec back with the daily stock market. I hope everyone had an awesome Memorial Day weekend. Tomorrow is Tuesday, so we're going to be getting back to reality. The stock market's going to be back opened up. So in this video, we're going to be going over all the stuff to get you caught up for Memorial Day weekend and on to next week, Tuesday, starting the week off right. So make sure you stay throughout this entire video so you get your full stock market update. We're going to go over earnings, and we're also going to dive into some individual stocks, some popular ones. So subscribe with post notifications on, and let's jump right into it. So first things first, on Friday, we saw a fantastic green day. Friday and Thursday snapped a 7-week losing streak for the stock market. So this could be the positive momentum and the sign of the bottom that we're looking for. However, there's no guarantee that this is the bottom. So dollar cost averaging could be your best bet going into the stock market the next few weeks. Upstart was up 16% on Friday, ChargePoint 13%, Robinhood 11%, and so on and so forth. Lots of stocks up between 7% and 10% on Friday, and Thursday, the day before, was also a huge day. All right, to do a quick update on earnings here, Monday stock market was closed, so Tuesday, that brings us to Tuesday before the open. We really don't have much going on. We have some Chinese companies reporting Tuesday before the open. After close, we have Salesforce, okay, which could be a very important one. We have ChargePoint, which could be a big mover either up or down. So we'll dive a little bit more into ChargePoint in this video. We have HP as well, which is a huge one, Victoria's Secret and View, okay, and Bark. After close on Tuesday. Wednesday, before the open, we have Capri Holding, which is like a luxury brand. I think like Gucci or Louis Vuitton is in there, and some other luxury brands and Capri Holdings. So that one could be doing good. We have some Chinese companies reporting a Wednesday before the open as well. And then Wednesday after close is a big one because we have GameStop reporting. GameStop is one of the most important meme stocks in the stock market, along with AMC, obviously. So there will be probably a big movement on GameStop on Wednesday after close as well. We also have UiPath reporting after close on Wednesday, which is a good metaverse stock that I have some money in. So that could be a good one to dive into as well. Thursday before the close, there's nothing much going on. Thursday after the close, we have CrowdStrike, which is a popular cybersecurity stock. Recently, it's been beaten down incredibly. We have Lululemon and Tilly's. So not much going on this week with earnings. We have GameStop, which is going to be interesting. ChargePoint, Salesforce, HP, and some of the other ones we already went over. And we have lots of requests for ChargePoint to talk about ChargePoint stocks, so let's dive into them. They're up 23% in the week, so they could already be pricing in a positive earning up around 30% in just the span of, 3 days, which is incredible. And if we scroll out to the past year, they're down 45% and down around 60% from highs. Also IPO'd in 2019 at around $10 per share. So in my opinion, if you can get in under $10 per share, that's going to be great for long term. They are a good company, in my opinion, for long term. However, they do have extreme risks for long term because something like Tesla could come in and wipe them out, or something like Tesla or Ford or Volkswagen can just come in and buy ChargePoint out, for example, which would be a bullish thing. They're also a negative earning company with a negative EPS of around 19 cents. That's expected. So the stock market does not like negative earning companies right now. They pretty much missed on their last 3 out of 4 earnings, and they've missed significantly in the past. So if they miss significantly on this earnings, that will definitely drag the price down closer to $10 per share, which would be around a 30% price fall. Blink Charging is one of their biggest competitors. ChargePoint is a lot larger. Blink is like a third or a fourth of the size of ChargePoint, but you can see that they recently reported earnings and they actually beat on their earnings, which could be a good sign for ChargePoint. So if we take a look at their income statement, you can see that they've been getting a little bit better on their profitability since 2020 to 2022. If we look at their total revenue, we can also see that they've been growing a little bit there. 64% growth from 2021 to 2022, with 240 million in total revenue. And you can also see their balance sheet has been significantly better from 2020 to 2022, with a huge increase in with a huge increase in assets and keeping the same amount of liabilities while almost tripling their assets, which is really good. And if we look at what analysts have to say about ChargePoint, 77% upside in the next 12 months to $23 per share. The lowest analyst has them at $16 per share in the next 12 months. And this was all reiterated a long time ago, so take these analysts' results with a grain of salt. They're 3-star analysts, 2-star analysts, not even rated analysts, and they've reiterated this a long time ago. So you can't really take the analyst price action into a huge part of your consideration. However, if we jump into an article and just read the summary, we see ChargePoint is slated to report its highly anticipated Q1 earning results on May 31st. ChargePoint stock has been hammered since its massive bull trap in 2020. We've urged investors to be patient in our previous articles to hold. ChargePoint has had a decline more than 40% since then. However, our price action analysts suggest a bottom is near. We revise our rating from hold to buy with a price target of $17. It implies a potential upside of 44%. However, we urge investors to use stop loss, risk management, and allocation appropriately for a speculative play. Is ChargePoint a stock a buy, sell, or hold? We revised our rating from ChargePoint. We've already went over that. However, investors need to consider that ChargePoint remains highly speculative play given its unprofitability. Notwithstanding its high growth cadence could help it gain operating leverage rapidly given its asset-light operating model. Furthermore, our price action analysis suggests that ChargePoint stock will likely complete its bear trap since action reversal not validated yet. As a result, it could forebode a noteworthy end to a negative flow bearish momentum. However, we urge investors to use stop loss risk management if they intend to add ChargePoint ahead of its validated price action signal. In addition, investors should also size their allocation in ChargePoint stock that's appropriate for a speculative play. We also have HP releasing earnings this week. Okay, up 11% in the past week. And if we go to the past year, we can see they're up 30% with huge up and down swings. And these swings range from 10% up to around 11% down. So if you're an option trader or a swing trader, I think a put on HP could be potentially useful. So if you need help drawing these lines in the past 6 months, it's been following the support and resistance fairly closely. You know, it could obviously have a breakout at some point, but the more times that it hits these resistance here, the weaker it gets. So there is a good chance that it's going to bounce back down to around that 30, 36, $34 price point. So in my opinion, HP $34 per share could definitely be possible. And if we look at a put, I would probably be looking at like this July 15th put, buying a put. They're only like $200, $189, this 37 put here. We would need that 35 break-even price, and we would just need HP to fall around 10%. We can also see they're at an all-time high. There's not many stocks in the stock market that are at all-time highs because they've been beaten down consistently. So there is a good chance that HP can see some downward momentum. However, with the earnings, it's very risky to play this because there's a huge chance that HP could beat their earnings and go up 5% tomorrow, and then you would lose a lot of money on that put option that you took out. So you have to kind of weigh the risk versus reward. So personally, I'm not taking out this put, but if you want to see what puts I am taking out, make sure you message me on Instagram to join my close friends list. And if we look a little bit deeper, is HP potentially undervalued? What's the opportunity in HP? Good news, investors. HP is still a bargain right now, according to the price multiple model, which compares the company's price to earning ratio to the industrial average. In this instance, I've used the price to earning, the PE ratio, that there is not enough information to reliably forecast the stock's cash flow, I find that HP's ratio of 5.9 is below the peer average of 15, which indicates the stock is trading at a lower price compared to the tech industry. And if we want to double check that, you can actually see that it's true. The PE ratio is only 6.9, very low PE ratio, implying that it is undervalued for long-term investors, specifically for long-term investors. The dividend yield is also a 2.2, so it could be a good dividend play as well. And the last one we'll talk about is GameStop, because they are highly requested and they are reporting earnings this week, so be prepared. Up 41% in the past week. And just in the span of 2 days, they went up around 63%. So they're also making big moves right now for traders. All right, now that they've already inflated so much, you can see that they have that support right around $80 per share. They've touched it a few times between $80 and $100 per share. So doing something like a put could be could prove useful for GameStop. As you can see, they missed earnings the last 3 quarters in a row, and their last quarter, Q4 2021, was one of their biggest misses yet. They were expecting a positive earnings number on EPS, and they actually came in at a negative earnings number. So here you can see I have GameStop's chart pulled up, and these little E's right here on the chart, the little blue E's, those are every time it reports earnings. Okay, so start the last earnings, remember they did bad, they actually shot up right after that earnings, which is pretty weird. Let me zoom in here. But besides the last earnings where it did shoot up when it reported earnings, if you look at the other blue E's on the chart, you can actually see that it goes down every time it reports earnings. So out of the last 5 earnings, it's actually fallen on earnings. So the last 4 out of 5 earning reports, we've actually seen the stock price fall after reporting earnings, which is very interesting and could be pointing to the GameStop's going to be falling. Remember, it's also up 41% from just a week, and it was up 61% just in 2 days. So in my opinion, it probably does have to retrace a little bit to around that $115 to $100 price point. So you'd press trade options, probably look around July 1st. And if you're buying a put, they're extremely expensive. All right. And you don't want to scroll too much down out of the money because they're not going to get the best option call. And it's extremely risky because even just one little option call, it's $1,400 that you basically have to risk. Options are very risky too. So personally, I wouldn't be doing this specific option call. In my option trading group, in my close friends list, I post calls and puts that are closer to that $300 or below price target range for options. If you do have a larger budget though, around $1,500, you could be looking at a put for a GameStop, could prove useful. However, it's extremely risky. We don't know what's going to happen with GameStop. This is a meme stock, so the risk is very elevated, especially that you're doing options on top of that. It's one of the riskiest things that you can do, especially when trading a meme stock. So I hope you guys enjoyed that quick earnings update video. If you guys want to learn a little bit more about Charge, check out this post that I posted on my Instagram at the Daily Stock Market. Make sure you're following me there if you haven't already. That's where I post consistent updates all the time. Also, at my Twitter is where I post consistent updates from now on too. I do around 5 to 10 posts on Twitters per day. So if you're not following me on Twitter, you're definitely missing out on a lot of valuable information every single day. My Twitter handle is super easy to remember. Also, it's just TDSM Stocks. And TDSM stands for the Daily Stock Market. So TDSM Stocks. Also, crypto is starting to heat up significantly. Bitcoin up 10%, Ethereum up 11%, and we have some altcoins that are up even 20, 15%. So now is not only a great time to get involved with the stock market, buying the dip, but it's also a good time to get involved with cryptocurrency. And if you need consistent crypto updates or want to get in the crypto market and need some help, the Daily Cryptocurrency on Instagram is my only other official Instagram, and it's revolved around everything cryptocurrency and NFT. So that way I split the 2 pages, one if you like stock market and one if you like cryptocurrency. So if you want to join the cryptocurrency family, make sure you give me a follow over there for consistent updates on cryptocurrency and NFTs. Thank you guys for all the love and support. Share this video with a friend if you think that they will find it helpful for this earnings week ahead. Subscribe with post notifications on so you don't miss any future uploads. And I'll see you guys in the next video. Remember, don't time the market, buy the market. Peace.